Hey folks, welcome to a product review at Finominal. Today we're going to analyze DFA's US Core Equity 1 portfolio, which is a mutual fund that trades under the ticker DFEOX, has a track record going back to 2005, so almost 20 years, and manages about more than $30 billion. And as per its name, it's a core equity product. So the way to think about this is that it could be a replacement for the S&P 500 or any other kind of like core equity position. So let's have a look in terms of what makes this product so successful, because $30 billion plus under asset management does mean a successful product. And just as a background, DFA stands for Dimensional Fund Advisors, because not everyone doesn't know that acronym refers to dimensional. Now, from a benchmarking perspective, the suggested benchmark is the Russell 50,000 index, which is actually also the benchmark that DFA puts down for this fund. So let's switch to that. And then let's have a quick look in terms of how this fund has performed versus benchmark. So over here we can see this track record for DFEOX going back to 2005. We can see it's almost indistinguishable to the Russell 3000. And if you want to kind of like see in terms of how the fund has done from a performance perspective, we do see the excess returns, which were, I guess, positive between 2010 and kind of like 2020-ish. Then kind of like during COVID, the fund seems to have given up most of the alpha and now it's slightly positive. I would call this rather random from an outperformance perspective, but let's see if we can explain that. So the first thing that we can do is run a holdings-based effect exposure analysis, where effectively we can see how does DFEOX compare versus the Russell 3000 on a number of different metrics, value-based, growth-based, momentum, volatility. We can also look at this from a chart perspective. Green means slightly above the average stock in the Russell 3000, red slightly below. And what you do see here is there's this slight tilt where effectively the stocks in this fund are more attractive from a valuation perspective, means being slightly cheaper, seem to be slightly worse from a growth perspective, slightly smaller, worse from a momentum volatility perspective, but there's also a quality theme here. And this is a holding space factor exposure analysis. Overall, as you can see, right, this ranges from 0 to 100. So this fund, right, is very close to the average stock in the Russell 3000. There's not much differentiation. We can switch and try to confirm that via returns-based factor exposure analysis. And so what we over here see are the factor betas of this fund to 5 equity factors. We do see that effectively there is a consistent positive exposure to the size factor, value as well, quality and momentum is kind of random, and consistent negative exposure to the low volatility factor. Now, what does it mean? It means it's actually quite similar to the results we've seen on the holdings-based factor exposure analysis, effectively stating that the average stock in this fund is slightly smaller, cheaper, and more volatile than the stock in the Russell 3000. And that kind of like ties back to dimensional. So dimensional is tied to the University of Chicago, Eugene Fama and so on. And that effectively has this focus on factors like value, quality, to a lesser degree momentum. Now, does that help the fund to generate outperformance? Now we can look at the alpha it has generated. Now, what we do see is that the outperformance consistency of DFEOX versus Russell 3000 has been low. It's like 9 out of 20 years, and the alpha consistency is 8 out of 19 years. Active shares is on the lower side, 25%. And if we then look at this from a cumulative return contribution, effectively see that pretty much all the returns are explained by the market. To be fair, this is a core equity product, so this is what you would expect. But you can see the equity factors contributed almost nothing, and there's been also no alpha. Now, so that means effectively whatever like DFA has been doing in terms of these slight factor tilts, they haven't been contributing much. Now, that also, I think, should give some thoughts in terms of what the relevant peers are, because although this is an actively managed fund, given that there is no alpha here in core equity fund, we would argue the peers are products that are more passive index trackers, for example, from Vanguard Total Stock Market Fund, Schwab, or the Russell 5000 directly. And now we can kind of move on to benchmarking DFA's fund. And the first thing that we're going to kick off with is a factor exposure analysis, where effectively we see, right, that the DFA fund has these slides tilt to its value, a little bit momentum, quality, versus these other products effectively have much lower factor exposures. Now, we already kind of covered that this fund from DFA hasn't generated significant outperformance. Then you could also question, right, has this fund generated a higher Sharpe ratio, right? Because outperformance is one, but you could give this fund credit if it at least would have generated a higher Sharpe ratio. But if you look at the Sharpe ratio of DFEOX over the last 15 years, we can see 0.76, which is lower than for any of those three passive index trackers. Now, the fee for DFEOX is 15 basis points versus you can buy VTI for 3 basis points and SCHB also for 3 basis points. So that kind of concludes our quick review of DFA's US Core Equity Fund. So as mentioned, it's a long track record. There are slight factor tilts, but these factor tilts haven't accumulated to anything. We can see neither consistent outperformance nor a higher Sharpe ratio compared to these passive index trackers, which are much cheaper, and therefore it seems to be a little bit difficult to justify why investors would allocate to this. Hope that helps. Have a nice day.